Hi, this is James Hugg with Westpac London's end of day report for Wednesday, November the 14th. Well, it was mostly a down day on equity markets today. We had some individual stories of note. Abercrombie and Fitch have increased their profit forecast for the year. Their shares are up something like 29%. More marketable Facebook shares became available today, saw Facebook rise 9%. Other individual corporate stories were fairly positive, and we did see some upward gains recorded, but the overall flow of data news today wasn't particularly good. In the US, we had a retail sales decline of 0.3% in October. Some of that was due to the storm, although the superstorm also led to people stocking up on stuff too. So the statistician couldn't really identify how much impact the storm really had. When you take out autos and gasoline, sales were down 0.3% as well. So that followed a 2% cumulative gain through the third quarter. These are October figures. So it looks like a bit of a pullback in spending, whether or not the storm was a factor or not. Very soft PPI, producer prices in the US as well, down 0.2% in October, with the core PPI also down 0.2%. European industrial production was down 2.5% in September, its steepest fall since the recession in 2009. National data showed losses of 2% or more in Germany, France, Spain and Greece. Italy down 1.5%. Portugal and Ireland both down 12% or more. Now, all this adds weight to our view that tomorrow's GDP report for Euroland will show a steeper decline than the market's looking for. Market's currently on about 0.1%. We think it's going to come in closer to a 0.4 or 0.5% decline in the third quarter. Now, UK employment grew by 100,000 in the third quarter, down from a 202,000 increase in the second quarter. But unemployment fell from 8% to 7.8% over the same period. Earnings data was subdued, around 1.8, 1.9% per year, whether you not include bonuses, but still running below the pace of inflation. And in October, benefit claimant count unemployment rose 10,000 compared to a 1,000 rise in September. The Bank of England's inflation report made fairly grim reading, really. Basically, I'll give you a quote here. We faced a rather unappealing combination of a subdued recovery with inflation remaining above target for a while. An unfavourable external environment continues to shape our prospects, including international imbalances, which have played such a pivotal role in the run-up to the crisis, and they still remain. So basically, the Bank of England is talking about inflation being a bit higher than they thought, a very patchy recovery, but by the end of the forecast period, inflation being around the 2% target with risks more or less balanced. And that's why they're not doing any further policy easing, although the payment of $37 billion to the Treasury, which is then going to pay down debt, that's $37 billion of interest that's earned on its asset purchases to date, the MPC actually views that as a further easing. So effectively they didn't do further QE, but the transfer of those funds to the Treasury amounts to the same thing. Okay, so that's the news today. In terms of markets, the ongoing concern about the fiscal cliff in the US seems to be weighing things down, as well as the data I mentioned, and the Dow at the moment is down 0.4%. It's just on 5 o'clock in London. At the close, the FTSE was down 0.75%, the French market down 0.75%, the German market down 0.75%, the Spanish market down 0.1%, and the Italian market down 0.5%. Copper prices today down 0.25%. Gold's up 0.1% at $1,727 an ounce, and we've got a 0.6% gain in oil at $85.88 a barrel. And the Aussie dollar, it's at 1.039 at the moment. It's dipped a little bit. We've got a few bits and pieces to watch for, but the highlight for me is going to be the GDP numbers for Europe, which, as I mentioned, we're looking for a fairly steep 0.4, 0.5% decline in the third quarter. That'll be the fourth straight quarter of recession in Europe. Unfortunately, I won't be around for that. I'm in other parts over the next couple of days. I'll be back in London office on Monday. So there won't be any reports for Thursday and Friday from me. Okay, so until next week, das Vidania.